was garbage. Hello, we are live. Let me make sure we're going live in both places.
Yeah. So Maggie has some new digs. So it was super exciting, right, Maggie, that you had a porch, but you had to jump off the porch because of all the trucks that were going down the street. Thank you for doing that, by the way. It was super loud.
Thought it was just going to be the one, but of course both trucks have to come right in a row, which I guess I'm glad it came before we started, so that's good.
And you're a little echoey because you haven't had a chance to zhuzh it all up. She's new here, right? Isn't that? It's not even been a week.
Yeah, so I moved to Madison, if anyone wants to know, Madison, Wisconsin. I don't have furniture, so the room is really echoey right now. Is it too bad? Just hanging out, doing work on the floor, getting it done.
Yeah.
That's what business owners do.
Yeah, you have to make do, be flexible, adjust, adapt. And if anyone can do that, I know you can, Maggie.
Thanks, Mom. But it's not really about me today. We have Brittany here, so let's put the focus on her instead, because she'll love that.
Hi, Brittany.
Hello.
Brittany, how are you today? Where are you tuning in from?
I'm doing great. I'm here in humid New Jersey.
Yeah, it's humid here too, so I don't know about all that. But we're excited to have you. You are one of our newer purse strings approved professionals, which is so exciting.
Yeah.
And we're going to talk about self-directed IRAs. And I'm excited about this because I don't even know what they are. But there was a lady. There was a lady who shared that she's been doing it for 10 years. And I was like, it must be doing really well for you, you know? So we're going to kind of talk about who it's for, who would use it, why you would use it, all that good stuff. So we can answer all your questions about it.
Yeah. And Brittany, are you a financial advisor, financial planner? How do you approach it?
Great question. So that kind of leads into a necessary disclaimer before we jump in that we are not fiduciaries. So while we don't provide financial advice or sell investment products, what I'm going to do today is more so provide lots of education about self-directed IRAs and the strategy itself and kind of how it works, best practices, what you need to know. That'll be the focus for today.
Good. Thank you for sharing that with us because we do talk about fiduciaries. So thank you for disclaiming that. And you're with the Next Generation Trust Company. And you're going to share with us self-directed IRAs. You know, I've been in the industry a lot. I've done a lot of training and education, but not a lot of talk around this product. Is it becoming more popular, or why is it surfacing all of a sudden?
Good question. So the funny thing about self-directed IRAs is that they've been around since the inception of IRAs in the 1970s. But I think one of the reasons that it's still not a widely known concept to a lot of people is just that the larger banks and brokerage houses of the world, like the Fidelities and Schwabs of the world, they're doing the heavy marketing and advertising, right? They have the big bucks, and those larger firms don't typically offer the types of investments that self-directed IRAs do. So it's not something that they would be really promoting. So we tend to be more exposed to hearing about the traditional stocks, bonds, mutual funds approach. So yeah, it's something that has, though, gained more traction in recent years. I would say part of that is due to an increased interest in alternative investing in general. When we look at just investing in private companies, a lot of the social and impact investing that's really heated up. Pre-IPO companies. Now there's a lot of people getting into these like late stage pre-IPO firms from an investment perspective. So there's a lot of interest in that space in general. And then naturally with that interest comes, how can I invest in these things with some tax advantages? So that's where the self-directed IRA comes in as a tool. And I think as people are starting to research and talk more about it, they're starting to recognize that it's an option. So.
Wonderful. Great. Well, everybody knows that we are here every Thursday, right? Noon Central in our group, Financially Fearless Foundations.
That's not right, but everyone's in this group anyway, so keep rolling with it.
We got a lot of F's in our names, that's for sure. But anyway, we're here in our Facebook group every Thursday at noon Central, presenting one of our financial experts, who we call our purse strings approved professionals. And they can be any type of financial type of professional. So we've had realtors, lenders, those who help with debt, money coaches. And today we bring you Brittany Melville. So she's going to share, like we were just talking about, on self-directed IRAs, but I'll let Maggie give you the formal introduction to Brittany.
All right, yeah. So Brittany works to empower females investors by educating them about their unique benefits of using a self-directed IRA for retirement planning. She likes to share this knowledge to help women see their own investing potential and feel confident in their decision and achieve financial freedom. They're a boutique firm, so their personalized service ensures clients receive the best possible experience with prompt responses to their questions and the ability to reach a live person, which is awesome. You might just reach Brittany. So customer service is at the beginning of everything they do, which is, I know, a big reason why Brittany is one of our approved professionals and why she's in our network. So I'm so excited to have our conversation today, Brittany.
I'm glad to be here. Thanks for having me.
I'm going to kick Barb off the screen there. And so anybody who's viewing, we'd welcome any questions you have in the chat about anything we talk about or self-directed IRAs in general. We're going to start by having just a conversation of, some of the main questions people have already, but please feel free to jump in at any point. So, Brittany, what is a self-directed IRA? Let's start there.
And that is a great place to start because that term is used, I don't want to say loosely, but it can be used in different ways throughout the industry. Some of the, like I was mentioning earlier, Fidelities and Schwabs of the world say that they offer self-directed IRAs, but it's a little bit different than what we're going to talk about today when we say self-directed. So what their meaning is with a self-directed IRA, your options with them are still going to be stocks, bonds, mutual funds, anything that's publicly traded, but they're going to allow you to really just like pick your own investments. So to like make your own menu kind of thing. Mm-hmm. What I'm referring to when we talk about self-directed IRAs is truly choosing your own investments, but specifically what makes this different is what you can invest in. And with a truly self-directed IRA, you are not limited to publicly traded assets. So that means that you can actually use your retirement account to invest in private, like we were talking about earlier, alternative assets, such as real estate, private equity, lending, even cryptocurrency, precious metals. So all of these things that aren't traded on the public markets that most people would think, I just have to use my personal money. These things can actually be invested in through a self-directed IRA. So of course, the benefits as well, aside from having more investment options, is that you have a little bit more control over the return that you're getting on your investment because you're choosing these truly private investments that maybe you've researched and you feel very strongly about. So you tend to have a little bit more say in what's going on with those investments when they're private. And then you may already be doing some of these investments outside of your retirement account, especially for people who invest in real estate, right? There are lots of people that invest in real estate, even on the side, in addition to their full-time jobs. Like I have an investment property. So if that's something that someone is already doing and they've been very successful and they know they're getting really good investment returns, it's a simple matter of applying it through the retirement account where they know they're going to get these really good returns. And often those returns can outperform what the stock market would offer, right? There's also the ability to kind of in line with that, diversify your portfolio. So usually
can I pause you for a minute and ask you a couple questions in there?
Yeah, sure.
So just looking at the front, is there a way to tell before you get involved in a self-directed IRA, whether if it's really self-directed or more pick and choose? Is there any other keywords that people should look for to kind of know that difference?
I would say that the distinction is typically going to be the company that's offering it, the custodian, which is what we do. We're a custodian of these IRAs specifically. So if you were to Google like this term, the companies that likely you're going to see are going to be those that specifically offer these types of IRAs.
Got it.
Whereas if you were just like looking with Fidelity or whatnot, they might market it within their part of their services, but it's not going to be primarily what they're showcasing.
And so, so I talked to a lot of different professionals, and if you talk to like a financial professional that you're going to invest with, sometimes they have a minimum, let's say of $250,000. And when this means that you have to bring $250,000 cash. So this is another option instead of always bringing that cash to the table, correct?
Yes. So yeah, that's a great point. So a lot of times, not only can a self-directed IRA be used as like a single tool for investing in something, but if someone is looking to invest and they have only so much in personal cash, and there's a gap between what they have in their personal cash and then what they need for the investment, they can leverage the retirement account as another investor, if you will, to make up for that difference. Or to your point, if there's a minimum investment and they don't want to use any personal cash because they just don't have enough, but they happen to have that in an IRA, then they could use that for the investment. So yes, it is another place to look.
Okay, cool. So how is this kind of different than, I mean, you've shared so a regular IRA or Roth IRA is always investing within the market where you can invest in many other assets. What other differences are there?
So actually, just a point of clarification. When most people think of traditional and Roth IRAs, they do think that they can only invest in the stock market. Within the category of self-directed IRAs, you can have a traditional, a Roth, a SEP if you're self-employed, and there are several other account types that all fall under the realm of self-directed IRAs. So I just wanted to share that as well. And then you were asking about how else is it different, right, from sort of the ones we're used to. So in addition to, I would say in addition to the investment options being a little bit more unique, and the investor having more control over the return on investment, there's also more involvement by the investor overall. So that is something important to note, because the business model, when we're talking about self-directed IRAs and how they're managed and maintained and administered by the custodian that holds them too, is a little bit different, right? We tend to think about like our garden variety IRAs being sort of like, I want to trade stock, I'm going to go online and like click a button and it's done, or I call in a trade to my advisor and it's done. In this case, because these assets are all unique and different, like you, Maggie, could say, I want to open a self-directed IRA and I want to buy the property down the street from my house. You literally pick any property that you want to own in your IRA, and it's not necessarily going to be on like a pre-approved platform already, right? It's something that the custodian would have to take a look at in terms of reviewing any documentation associated with the investment. So where I'm going with that is that it's a little bit less of like an automated process because of the unique nature of alternative assets.
Right.
So there's more sort of like a personalized approach to doing a review of these types of investments by the custodian of the IRA. And that's why the customer service component is especially important when we talk about self-directed IRAs, because there tends to be more collaboration between the investor who's holding the IRA and then the custodian who is managing it for them. And then whoever they're investing with as well would be part of that process for everybody to be communicating about the investment, be on the same page to make sure that the custodian understands the investment and can process those investment transactions for the investor themselves. So.
Okay. That makes sense. And so, what kind of retirement plans can you use to do the self-directed investments?
Sure. So the traditional IRA, which is tax deferred, tend to be the most common. That those can be self-directed, of course, through a company that offers self-directed IRAs. Roth IRAs, which are going to be your after-tax dollars that grow tax-free. So that's a very powerful tool. And then for business owners, SEP IRAs, simple IRAs, solo 401k plans, and then other types of qualified plans for business owners. Like if someone happens to still have the luxury of having like a pension plan available or a profit sharing plan, any of those types of qualified plans for business owners can also be self-directed. I should mention that these are specific to next generation, and not every company is going to offer the same account types. So it's a good idea to ask that specifically of the custodian that you're looking at. And then in addition to those types of retirement accounts, you can also self-direct HSAs, so health savings accounts. So rather than just kind of like parking your cash in there and just looking at it as sort of like a piggy bank, you can actually take the funds that are in HSA and strategically invest them into some of these alternative assets to grow that over time. And then, of course, as with HSAs, you can take them out tax-free for medical expenses. And then the same thing also applies to ESAs, which are education savings accounts for children. So if anybody has a child under the age of 18, they can still establish an education savings account and then invest the money into alternative assets, self-directed. And then, of course, with those accounts, any of the funds can be withdrawn tax-free for education expenses.
Wow. So there's a lot of options.
Yes.
Yeah. It seems like everyone could jump in there somewhere.
Yeah. Just about anyone can qualify for at least one of those, as long as you have a tax ID or a social security number and you have U.S. income, then yeah. So it usually comes down to having a conversation with somebody to understand their situation. Are they self-employed? Or if they're a real estate agent and they're 1099 worker, they can technically, have a SEP. So these are the types of things that we talk about. And then, of course, it also might come down to them having a conversation with their accountant or tax advisor just to determine what type of account is best for their situation.
Awesome. So, granted you have these conversations, to figure out what their situation is. What other aspects would make a person for a good fit for a self-directed IRA? Age, minimum, time consuming, all those good things.
Yep, that's also a great question. And that's something important for individuals to consider if they're thinking about this strategy. Because as I mentioned before, the business model is a little bit different and it's a little bit more personalized, and there's some more involvement required by the account holder. So for one, someone that is comfortable being involved in the process, right? If you want to be completely passive and you don't want to choose your own investments, then a self-directed IRA is not for you, right? This is for people that want to have a little bit more control in their own hands, and that are comfortable choosing their own investments. And it's a really good fit for people who are already experienced investing in these types of things that we mentioned, like real estate or private equity, partnerships, people that are doing private lending, those types of things. If they already have that experience and they're very comfortable looking at their own and doing their due diligence on them, then it's just a matter of apply it to your IRA kind of thing.
Right.
From an age perspective, there really isn't a limit, but it tends to be a better fit for individuals that have been at least established in their careers long enough that they've been able to accumulate enough retirement savings that they have to work with. We don't have necessarily any minimums. There are not really minimum requirements to have the IRA, but because they're self-directed, they're more so driven by what is the investment that this person is looking to do and how much funding is required for that investment. So if it's crowdfunding and it's a minimum investment of $15,000, then technically that would work, right? You could just put $15,000 in and do that. But if it's a real estate investment where someone needs to have, 6 figures or something like that, then they're going to want to think about that in advance. Like, what are my goals? What am I looking to do with this account? how much am I going to need to make my investment? And do I have enough in my retirement? And if the answer is no, then maybe it's better served for them to wait a bit until they've grown that value to a point where they can use it for these things.
Right. So it seems like there is some options or opportunities at a couple different levels to jump in, depending on how much you have.
Correct.
And so are there any restrictions on a self-directed IRA? It seems like there's a lot of opportunities to jump in.
Yeah, as with anything, especially where the IRS is involved, there are some rules.
Yeah, there's a couple of rules.
Yeah, they just don't want us running around doing anything we please with IRAs. But
What?
at the end of the day, there are sort of two levels of guidelines that someone should be aware of. And this is where the education is very important, and where also having a custodian that is knowledgeable and responsive and able to provide this regular guidance is also very important. So the first level of restriction is when we talk about what you can and can't invest in with a self-directed IRA. The IRS has only two limitations. So they do not allow life insurance contracts, and they do not allow antiques or collectibles in an IRA. So that could be things like old card collection, or
Right.
if you had like antique rugs or something like that, those would not be allowed. And of course, like I said, with life insurance. But other than that, anything that's not publicly traded could be in a self-directed IRA. But then there comes a second level of regulation and limitation here when we start to look at who is involved in this investment transaction. And if there are multiple individuals involved, what is the relationship to each other? Meaning, if I have an IRA, for example, and I wanted to use my IRA to purchase a property from my child, I am not able to do that because the IRS would consider that my child is what they call a disqualified from my IRA. So they basically define the relationships that are considered disqualified as the account holder themselves. Like for example, I couldn't use my IRA to like sell myself something or buy something for myself, or transactions between my own IRA and me, right? Same thing would go for any spouse, ascendants, descendants, and their spouses. So if you think about like your family tree and like a lineal direction, like up and down, those relationships are disqualified from doing a direct transaction with the self-directed IRA.
That makes sense.
However, that doesn't mean that they can't partner into an investment, like different streams of funding. So I won't get into that here because I know that we're just getting started with this conversation and there's a lot of depth we can go into, but just for today, for the purpose of today's conversation, just realizing that there are certain relationships that are off limits. And it's just a matter of educating yourself and talking to your custodian about, if you have an idea in mind of something that you want to invest in, have a conversation with them, ask them, is this something I can do with an IRA? And then go from there.
Awesome. Yeah, that makes sense that you don't want this family web. You could see a lot of money moving around or crazy things happening,
I think that, I obviously can't speak for the IRS, but I think that at the end of the day, the idea is that an IRA is meant to be a long-term investment vehicle, and it's not meant to be used as a means to an end for somebody to get money now or get a benefit now, right? The benefit should really be for the IRA as the account that's designed to grow in value over time. And then of course, once that person reaches retirement age or later in life, they're entitled to those funds. But while it's still in an IRA, it should really be not used as a means to an end to do something else. Right.
That makes sense. And then do you have like a risk tolerance questionnaire or anything before people really before they start to invest to make sure this is a good fit for them?
Good question. So we don't have a risk tolerance questionnaire. It's more so a matter of making sure that we are setting the proper expectations and reminding investors that you assume your own risk with these investments because they're not publicly traded and you're basically seeking out your own. So in order for this to be a fit, you should feel comfortable doing that due diligence to assess the risk on your own and be comfortable with the level of risk that you take. So whatever your risk tolerance is fine, as long as you're comfortable with that in choosing your own investment. So that's the furthest really that we go, is to just make sure that we explain that very clearly.
I mean, self-directed, it's in the title. You gotta know that you're doing some work in there for sure. So you're at Next Generation. What does the process look like if someone worked with Next Generation to start a self-directed IRA?
So after the education is provided, that's usually the biggest question, is like, how do I set this up? Like logistically, how do I make this happen so that I'm following all the rules and I can get the tax advantages, right? Because the idea behind this is that you're going to use your IRA as the investment vehicle. You're going to invest in something. When you earn that return on investment back, it goes directly back into the IRA. And then, of course, because it's doing that, you're not responsible for the tax as long as it's staying within that IRA, and then you're going to grow it over time. So the first step in the process is establishing a self-directed IRA. So many people already have IRAs, or they might have 401k plans with their employers, or old 401k plans, or similar types of plans. But in order to do this, you would have to establish a newly formed account with a self-directed IRA company, or custodian, I should say. So that just involves filling out an application. But then the next question becomes, okay, now I have this account I opened. How do I get funds into it so that I can start investing? And that's where we have the conversation to understand, do you have IRAs elsewhere? So for example, if someone does have an IRA with Fidelity or Vanguard that's invested in the stock market, they can move some or all of the funds from that IRA and do a direct transfer from that IRA to the self-directed IRA. There would be no tax consequence or anything like that in order to transfer from one IRA to another. So that's doable. Or if they had, as I mentioned before, like a non-IRA, but it was a retirement plan, like an old 401k, for example, or an old pension plan, they could do a rollover as long as the account that plan is eligible to roll over. They could roll it into a self-directed IRA. So in all these cases, what ends up happening is that now there's cash sitting in this IRA waiting to be deployed. So the investor is working with their custodian to open the account. The custodian is helping the investor, depending on the method they're going to fund it, get the funds moved over. So all of this is done together, step by step. And then once the cash is sitting in the account, the investor is going to tell their custodian, here's what I want you to invest in for me on behalf of my IRA. So then they're going to submit basically a direction of investment authorizing, I want you to invest in ABC company for this much, and I want you to send it to this bank account. So all of those instructions are provided to us because, again, we're not making any discretionary decisions.
Right.
The control is completely in the investor's hands. The only place that we might come in is when it comes to reviewing the investment to understand whether it is within those guidelines and restrictions that we talked about earlier. So that's where we would, once we get the direction of investment from the investor, and then they've given us the supporting documentation around what it is they're investing in, we do a thorough review from a compliance perspective to see whether there are any red flags as far as, are there disqualified people involved in this investment, like we talked about before, that shouldn't be part of this transaction, or is the IRA not labeled appropriately on the documents, right? Our main goal is to make sure that the account keeps its tax advantage status and that something isn't done to jeopardize that. So that's what we would look for in that process of going through the investment review. And then once that's done, the custodian processes the transaction. So funds move out of the IRA to either it's going to be an entity or they're going to purchase real estate or whatever it might be. And from that point on, the the purchase is complete. And then it's a matter of, depending on what you've invested in, does it require ongoing sort of like management? So a case where that would be most involved would be if someone did buy real estate and let's say they wanted to fix it up and then sell it, or they wanted to hold it as a rental. Then any expenses associated with the real estate, in this case, would be paid out of the IRA. So the custodian would process all of those payments for the IRA. And then, of course, anything that's being paid back. So if it's a rental property, the tenants are going to pay rent to the IRA itself, and then that rent gets deposited into the account by the custodian. So essentially, the custodian is sort of like the middleman between the investment and then the account holder, so that they're not having to take the money out personally and incur any tax liability, but they're still able to kind of make decisions with their money and sort of manage it from that hands-off perspective.
Awesome. That makes a lot of sense. And then my last kind of question for you is, what's the payment like for next generation? Do you take out a percent? Is it a monthly fee? Is it a one-time fee? What does that look like?
Good question. So the fees are typically a one-time setup fee to open the account. And then the main fee is going to be a custodial fee. So because we're not providing investment advice, we don't have advisory fees per se, but the custodial fee is going to cover tax reporting, record keeping, statements, online access, all of the administration ongoing to maintain the account. That's what the custodian will do. So that fee, it will vary from company to company. We offer 2 different fee structures, and the investor can choose which is more cost effective for the situation. The first one would be a flat rate annually for each investment that's held in their IRA. So regardless of the value, they just be paying a flat rate per investment they're holding. And then the second option is a value-based. So regardless of the amount of investments, just look at the total value of their self-directed IRA. And depending on what that value is, there'd be a quarterly fee assessed. And of course, that could fluctuate over time. So that's the main fee, and then there would be transactions associated with purchasing and, associated with selling an asset.
I would assume that all those fees are cheaper than if you chose someone who was doing your investing for you.
I think too that if you think about it from the standpoint of what you'd be paying from a tax perspective, like if you weren't doing it through an IRA, obviously you wouldn't have to be paying those fees, but then you would have to be paying tax on everything that you're earning. So it's sort of the trade-off, right? To have the ability to use this vehicle to get those tax advantages. But of course, you're paying for the service for this company to manage that all for you. So yeah, at the end of the day, it ends up being pretty reasonable from a perspective when you think about the trade-off and the advantages of doing it from a financial perspective.
I mean, you got to pay somebody somewhere at some time,
You're paying somebody.
Yeah, I mean, we know what happens, so you just got to figure out what you're getting into before you get started.
Right.
And then I was just wondering if anyone else in the community has any other questions they want to ask, or is there, Brittany, anything else that you want to mention? Anything else that we didn't hit on today?
So before, I don't know if questions are coming in, but the last thing that I would really, or the thing that I would just hit on again and just reiterate is education. I do notice that the more educated somebody is about self-directed IRAs, not only what it is and how it works, but sort of what's expected of them, the more confident they're going to be in being willing to take the step to do this, right? And of course, it doesn't mean that you have to take all of your retirement funds that you've ever earned and put them all into a self-directed IRA. You can just open one for one specific reasonable investment if it's something that you want to give a try and see if it's something that works for you. You said that there was somebody that's been doing it for 10 years. So it would also be interesting to talk to other people who have self-directed IRAs and ask them, what worked well for them and how they found success doing it. And you'd be surprised if you're just kind of like networking now in any group, even like real estate investor groups. if you're just networking with people and you happen to ask in a room of real estate investors who has a self-directed IRA, there's definitely going to be people that raise their hands. And then just asking the question to find those people, and then just have conversations with them to further, get that firsthand perspective, but then also educate yourself through a company like a custodian that can really guide you and get you to a position of feeling confident in your decision. And that's what what we mentioned earlier, and what I feel very strongly about is just having the access to this information.
Definitely
helpful. So
yeah, this is just a little dabble to get people started, to get people interested. Please, which I know Next Generation provides way more education, and when we're signing off, we'll make sure all that information gets passed around as well. It's at the bottom of the screen. But this is just a dabble to get started. There is more education about this. And you can just dabble when putting in money as well. You don't have to, like you said, you don't have to start with all your funds either.
Right.
Let's see what questions Barb has to wrap us up.
Well, this was really interesting. We've never addressed this topic before, and it just seems like so many people are really becoming more engaged in their own investing these days. I mean, you can download an app and start your own investments, or it's just a little bit more engaging for the independent investor, where normally it was you had to have, everyone thought they had to have a lot of money and really understand the stock market to do all of that. So this is really interesting, and I learned a lot about what could be in your IRA as an investment. So that's really exciting as well. And my one question would be, do people ever get in over their head with something like this, or do you manage that as well?
So from a risk perspective,
yeah.
So So as with anything, there's always the risk of fraud or just bad investments, right? So while we are not reviewing investments for risk per se or legality, we are always keeping the pulse on whether or not something seems like a red flag. So if that were to be the case, we have the ability to at any time no longer hold specific types of investments if we don't find them to be feasible as a custodian. And of course, we do also provide education on protecting your IRA from fraud and things to look out for. We have a webinar library on our website that has tons of webinars on different investment ideas. And one of the webinars that we've done was on protecting yourself from fraud. So I would encourage anyone to also, check that out, because as we said, the self-directed IRA, with its many advantages, it does also put onus on the investor to be comfortable with their risk and to make sure that they're doing due diligence in a way that they know what to look for. So absolutely, it's a good question.
Yeah, super interesting. Yeah. Thank you so much, Brittany. This has been very enlightening. I've taken copious notes. I'll go back over them. But I appreciate you bringing this to us, because I think it opens kind of a whole new world for IRAs that we never really explored before here at Purse Strings. So I appreciate you bringing this to the table.
Sure. I appreciate the opportunity. I love talking about this. So any opportunity to answer questions or provide some more education, I'm here.
Wonderful.
Awesome. Well, yeah, thank you again, Brittany. You can, she's at Next Generation Trust Company. It's nextgeneration.com. But she's also one of our Purse Strings approved professionals. So you can check her out on our website, pursestrings.co. Reach out with any questions, comments, whatever you have for Brittany. She'd love to talk to you and hear all about it and give you some more education. So thank you, and we'll see everyone again next week, Noon Central. Bye.
Bye, everyone.
Bye, everyone.